Money Miners, you know all about this one, our final episode of the year, the wonderful Pete Kerr, just in a moment. We can't wait to give you our very last bit of content for the calendar year 2026. But first, JD.
Final episode of the year, mate. It's been a ripping 2025. I hope everyone's portfolio out there reflects it. Commodities have been on a tear. And you might be thinking it's time to take a few chips off the table, diversify a bit.
No, I'm very pro-cyclical. The portfolio goes up, I want more.
Well, we've been having a few wins across the portfolio, and hopefully everyone else there has as well. And if you are thinking of taking a few chips off the table, we're in Australia. You think of property, right?
Mate, what could be more Australian than the property market? I don't know.
Nothing's more Australian, right? So why not go with a group from Brizzy, a group called Exceed Capital. Mate, they have this flagship fund called The Collective. It's an open-ended fund. It's diversified. Diversified across locations, diversified across different asset classes, diversified across different businesses as well, mate. Sounds pretty good, right?
We're talking about commercial property here. If you just look historically at that one fund, 7 to 8% cash return paid monthly. And then there's obviously capital gain on top of that. So it's a very interesting way to add something a little bit extra to your portfolio that is maybe a bit less volatile than mining stocks. But we love mining stocks. Thank you, Exceed Capital. Go check them out. Go to Pete Kerr. Final episode of the year, as always, joined by the wonderful Pete Kerr of the AFR, or the Financial Review. We've got to call it the Fin from now on, don't we? I feel like we're just stuck in this habit of calling it the AFR. But
anything you want, you can call it.
Well, we'll call it Pete's home ground. We're delighted to have you here. Every year you join us, Pete. We reflect on the year that was and the year ahead. We're going to do it again. And 2025 has been a blockbuster year in many respects, a defining year. JD's called some of the things that have happened this year as the most important stories of the decade in terms of our industry. I'm really keen to peel through some of those, like big themes, big stories, big company and corporate moves, and importantly, look ahead at what could be in 2026 again. We're gonna get your predictions. We're gonna predict some stuff ourselves and keep ourselves accountable for what we called last year. Pete, thanks for coming on Money of Mine.
Great to be here. I feel like I'm like your Father Christmas. I only appear once a year, like shortly, late December. So 3 times in a row, it's a hat trick. I'm very pleased to be here.
And everyone's thrilled for it. Pete, we're delighted to jump into these stories. And we were tic-tacking over the past week about what are the big stories, what should we unpack? And the first one on that list was geopolitics, and how geopolitics has really made its sort of presence felt across the minerals, the mining space. And the impact's been huge, thinking of things like price floors, of government grants, of export-import banks getting involved in financing projects, be it rare earth, critical minerals, all these sorts of things. So I want to start the conversation here, and given that you've got a few years of experience on us here, I'd love to hear from your perspective how monumental you kind of think these moves that we've seen are, specifically what the US has done in underwriting price floors in things like rare earths.
Yes, I mean, I've just sort of coming to the end of my 14th year covering this sector, and I've always said, like going back right to the start, the thing that I found most fascinating about it, of many things, was the geopolitics that was always at play. So when I started, it was around the time of Kevin Rudd's mining tax proposal. And, that obviously blew up and became a big thing. And I remember one of the CEOs of the big multinationals saying to me one time about how the nation states, they've got us over a barrel in the resources industry. And I was sort of puzzled by this, right? Because the narrative was, the big miners push around the politicians. They own the politicians. They tell them what to do. But the point he made was that if you're a shoe company, so let's say you're Nike or Puma or someone, and you've got a shoe factory in, let's call it any country, like Thailand, for example, if Thailand raises the taxes, you can just go across the border to Cambodia and build the exact same factory. Goodbye, Thailand, continue on your merry way. In the resources industry, they are where they are in the ground. So the nation state has such more power over this industry. So that sort of, for me, was always the bit that I liked the most. Over the decade, we saw things like Indonesia, do export bans and all these things that affected commodity markets. And that was kind of cool to watch. But these past couple of years, it's just been geopolitics on steroids. this time last year, I was with you guys on this show, and we were talking about this, about how incredible it was that our taxpayer dollars were being lent to Iluka to make the Eneabba refinery. This was a controversial thing, and everyone's got different views about it. Well, that looks like child's play now. Like, come this year, we've got US government setting price floors, as you mentioned. We've got the Australian government buying shares in Liontown. Like, that was not on my list of predictions for 2025. Government support for the industry used to be drilling grants, and then it was a bit of a step when they started giving concessional loans. Now they're just buying shares in pre-revenue companies sometimes. Obviously, Liontown now has some revenue, but there's other explorers who are pre-revenue who the taxpayer now owns shares in. So this is incredible territory, to be honest. And for me, it just opens up so many more questions. Like, those Liontown shares, as we sit here today in December 2025, the Australian taxpayer's done well out of that, right? Like, they've probably tripled from that equity raise. And who's the dude in Canberra sitting there managing the fund, like being the little, Michael Burry of Canberra? Like, are they selling the Liontown shares today to make a tidy profit? I don't know. So that's what keeps me fascinated, I reckon, by this industry. Just the growing interplay of governments, this emerging, bifurcation of the world between a Chinese and a US state. It's moved markets all year, and I think it probably will again next year.
There's one more layer as well, Pete, which I think really started gathering steam around the AFR mining summit in, I think, May of this year, and that is the stockpile, the critical mineral stockpile that the Australian government was talking about. Going to put you on the spot here a bit, but how effective do you think that will be, and what form do you think that's going to end up taking when we get a bit more detail over the next half year on it?
So there was a bit more action on that front just last week. So depending on when your audience is enjoying this podcast or hating this podcast, hopefully you're enjoying it. I'm talking about sort of the middle week of December. I gather AMEC, the lobby group based in Perth, are heavily involved in formulating a proposal. And the hope is that this will be an industry-led proposal that the government can sort of rubber stamp. The government came to them and said, in broad terms, this is what we want to do. How should we do it? The industry is now going back to them and saying, we think you should do it this way. So if that model gets up, in really simple terms, it sounds like it would be nation-to-nation agreements. The governments of Australia and, let's say, for instance, South Korea, agree that Australia will provide certain volume to South Korea over certain years. And then the Australian government turns to miners in this country and says, well, can you guys please deliver that? Helps them out, concessional loans, all those sorts of things. And I guess ultimately, if Australian mining companies failed to deliver on the promised volumes, then the taxpayer is on the hook. That's when the taxpayer might have to step into the spot market, buy some volumes and get them to South Korea. So it's sort of, if that model were to get up, it's kind of smart in the sense that the government can play a big role here, but might not ever actually spend a dollar. If you know what I mean. If the Australian miners deliver to the promise that Canberra makes to South Korea, well, then it's just transactions between the miner and the customer. So that seems to be the default leading model. And it sounds as though rare earths, NdPr, is the most likely place it will start, but perhaps also gallium, maybe antimony. And I think that's because, say, gallium and germanium, the hope is that they'll be able to get those off the existing smelters and refineries, or the Near Star ones and so forth, or the Alcoa ones in WA. Add a little circuit. It's not a lot of capex. And you just extract, gallium out of what was going to waste. So I'd expect those two or three will be the first commodities there. The lithium miners far less convinced about this as a concept, far less unified. The rare earths guys seem relatively unified. And I guess to some extent that makes sense, really, because the lithium miners generally are incumbents. They are out in the market selling this stuff already. They have contracts. So if you're going to try and set price floors, you're kind of interfering with the contracts they've already got set. Whereas most of the rare earths people in the conversation, not yet in production. So it's sort of easier to start there. So that's where I would expect it starts.
The next layer that I think about heaps when it comes to geopolitics, and it's interesting what you say there, Pete, about the Aussie government perhaps not having to write a check, because let's see which projects get funded. Let's see where the money to finance these projects comes from. That's a very open-ended question. But the countries with which we do these deals is another really interesting layer from my perspective, because you mentioned South Korea, obviously with the US, but we're in the middle of this China-US kind of trade war, and iron ore is the elephant in the room when it comes to this. And we have seen a lot of back and forth with BHP and the more unified iron ore buying group in China now, that's trying to pull together all the interests for the steel mills and have a bit more sway. How have you seen this story evolve over the year, rather? And where do you kind of think we're going on that trend? Are we going to see more renminbi deals? Is that something on the cards for next year?
Wouldn't surprise me if we do. I think, I guess what we can be certain about is that there's currently no deal between BHP and the Chinese buying desk. Just last week in mid-December, we were continuing to see another little flurry out of CMG of jawboning, I guess, where they tried to crack down on essentially the portside trading in China. This is something that the three big West Australian miners have increased a lot the past few years. The idea that you get the iron ore to a yard at the port in China and you keep it there longer than you traditionally did, and you can maybe blend it with some stuff from Simandou or from Vale or whatever. You'd have to say that as things stand, the Australian miners, I mean, proximity bias, maybe we're falling victim to that, but they seem to be winning, right? Like the iron ore price has been stronger than everyone expected. Late last week, it was still 105 US. Who knows whether, that becomes famous last words next year. But yeah, like it continues to hold strong. Rio Tinto shares hit an all-time record on Friday. They've never been higher ever, at an iron ore price of 105. Keeping in mind the iron ore price was 230 back in 2021. So yeah, it wouldn't surprise me if China wins some concessions. But if you look at it the other way, are they a bit desperate? Like, if they're resorting to a lot of these sort of regular sort of outbursts about, unnamed sources say, we'll do this and we'll do that. I don't know, do you do that if you're getting traction? I did hear from someone extremely well placed on this debate that one of the world's big four miners, and I actually don't know which one it is because the person refused to tell me which one it was, but one of them has threatened to go entirely to the spot market in terms of volumes as well. So whilst BHP is the focus of this, I think some of the others are dealing with it intensely as well, and some of them are ready to take to really take the fight up and go, we're going to back ourselves to be able to withstand whatever you throw at us.
I think it's such a big and evolving story. I don't think I'd characterize the Australian miners as winning this fight. I think like iron ore price elevated is a function of many things, but I think like CMRG on many fronts is exerting more and more power, and they're absolutely like having an influence for the first time in many years. And we've seen the concessions that BHP sort of had to make around its gimbal bar products and the likes as a result of some of this market power. One of the underlying all of this is like what are we denominating trade in? Like what's our de facto currency? What's the reserve currency of trade? And there's and what are the terms of that trade going to be? And it was such political hot potato to even kind of talk about the denomination of iron ore trade in renminbi, despite the fact that 30% of spot volumes trading in renminbi was kind of standard practice until and just not really discussed or anything like that. and that's clearly a point of contention from CMRG. They want more trade in renminbi, and they want to have more market power to negotiate with the respective iron ore miners. You look at another like bulks oligopoly that exists. You've got the potash giants in Canada, the likes of Nutrien and Mosaic, and there you've got this effective oligopoly marketing machine. Those two parties actually collectively determine what the output is going to be, and effectively fend off any new entrant. But BHP is trying to enter that arena. Do you think there's justification for a potash type OPEC to emerge in the iron ore sector, Pete?
Wouldn't it be amazing? Look, maybe. I wonder. I mean, it gets hard with regulators potentially if BHP and Rio do it, but I mean, are MinRes and Hancock already close in that regard? I'll phrase that as a question. I don't know. That's not a statement, I guess. But I guess there's scope for that, isn't there? And look, some people on the Chinese side might say that the Western miners already tried to do that with the creation of some of these price indexes. There's Global Ore, which was set up about 12, 13 years ago, and Global Coal was set up in London as well. You've heard a veteran of that process, Tony Ottaviano, speaking of Liontown, he talked about the lithium industry needs to go and follow that process. So maybe, but I'm just not sure if it will come to that. Like, it's not like iron ore prices are at 200. We saw last week the CMRG came out and said that there was I think the exact words were something like, there's unreasonable heat in the iron ore price. I don't know. Is 105 unreasonable heat given where it's been?
Here's my question to you, right? How much of that is CMRG buying up spot volumes to exert even more power? So CMRG is one of the reasons that the spot price is where it is, because they're buying a lot of spot volumes themselves, and that gives them more and more collective bargaining power.
Yeah, I don't know is the answer.
Yeah,
I don't know. Yeah, it's going to continue to roll on next year. The iron ore market's evolving fast. We've got Simandou coming in, and notionally that's been talked about as being a risk to the Aussie iron ore miners. If you watched Rio Tinto's Investor Day, I think it was December 4, or if you haven't, I'd urge you to go have a look at your audience, go have a look at what Vivek Tulpool talked about. He's Rio's sort of commodities and markets guy. And he was the guy who famously sort of said China will reach 1 billion tons of iron ore demand, and he got ridiculed for several years. And then when it came through, Vivek kept receipts, and he made sure everyone knew it had come through. His presentation the other night was a bit more punchy than normal, actually. He was really mounting that case about how the market has drastically underestimated the impact of depletion in the iron ore market.
Yeah.
Now, they would say that. They're talking their book. But, it's a theme that I saw BlackRock World Mining Trust pick up on, and they were sort of publicly talking a couple of weeks ago that they sort of see that as well.
It wasn't just Rio. It was Vale had a capital markets day the same week and spoke to the exact same phenomenon. And both of them, I think, have a very healthy floor price on what iron ore could be. And the market likes to talk about the impact that Simandou will have, but the reality of Simandou coming online is it actually might just replace depletion that is coming from existing mines, as opposed to really meaningfully impact the total supply equation.
And that's if Simandou goes to plan, right? I mean, at the end of this month, it might be like December 28 or something. Guinea's going to have its first elections in about 5 or 6 years. Now, let's hope, fingers crossed, they go smoothly and they are peaceful and democratic. But I mean, who knows what's going to happen, right? I don't know. It makes sense that CMRG should have enormous power and basically should be able to just design this market however they want it. But they've been around a couple of years now, right? And the price still seems to stay in that band that the big miners talk about, between $80 US a ton and $100 a ton, as being that sort of big bank of supply that, if the price dips down, fair bit of global supply becomes uneconomic.
Yeah, that high price shoulder is a really interesting layer to the market. And I think if we zoom out on the pricing lens for a moment there as well, and not focus on Australia versus China for a moment, I think the US is the real loser, having less priced in the US dollar, because what is the actual impact to the iron ore price if it's priced in another currency? I think that impact is more on the margins, but in general, China's trying to just get more trade through its currency, and that would be a win for it. But that's perhaps a bit of a side note. I did have a question on Simandou for you, Pete, and I note you wrote a fantastic article maybe a month or so ago, a real deep dive into Simandou and everything going on there. We have seen some talk lately with Rio Tinto and their interest, and the DLC and everything, with new management looking at this in perhaps a slightly different light, and the 15% Chinalco interest coming into question again. Do you think Simandou is seriously on the cards to be perhaps a stake in that negotiation in an eventual collapse of the DLC?
It's a fascinating question, and for any of your audience aren't aware, there was a story that Reuters published about a month ago, which basically implied this, that Rio would effectively sell an asset to Chinalco, which is its biggest shareholder, as a way, and in exchange for some of Chinalco's shares in Rio, as a way of reducing Chinalco's stake on its share register, which, Chinalco's state is right at the limit imposed by Australia's FIRB, prevents Rio from doing share buybacks. Maybe. I don't have any sort of personal confirmation that is underway. I don't know. I can sort of see Simandou and Chinalco are obviously a partner in Simandou, so they're already there. It sort of makes it easy from that point. If you're Rio, I think there is some sort of strategic merit in having a bit of Simandou as well as your WA business. Just gives you that great insight to the market. Maybe there's blending opportunities in future. So I think there is merit for Rio keeping Simandou, if that makes sense. But yeah, and I would have thought, are there other assets that they could do the same sort of deal with Chinalco? Chinalco do many things, but they are originally an aluminium company. Rio's got plenty of aluminium assets.
Rio would love to sell its aluminium assets. Unfortunately, Chinalco's not going to want them.
Let's give them Tomago.
Although, there's fascinating things happening in the. Sorry to deviate from your question.
No.
Bit, Jonas, but fascinating things happening in alumina as well. And your audience is probably already across this, but it sounds, there is a prospect that Indonesia is going to do to alumina what they did to nickel 2 to 3 years ago, and crush, the rest of the world. But yet China's, sort of effectively got a self-imposed cap on its aluminium smelting. So people who own smelters outside China are sort of starting to get slightly more confident about being an aluminium smelter. The people who own the alumina refineries, which was quite a sweet spot for the past, decade, 15 years. The former ASX company Alumina Limited did really nicely for a long time. So that's a fascinating market. Coming back to your question, I don't know. Would be an awesome deal if they could do it. And speaking of Simandou, I'm sort of also interested to watch whether Simandou is the first of many African iron ore projects. So our gut feeling is probably to say no. All these other smaller ones, such as Ivanhoe Atlantic, who are trying to take a Guinean iron ore deposit down through Liberia to the coast, Genmin, who are in Gabon, Zanaga, who are in, I think, Republic of Congo. Common sense says these guys will probably struggle, right, to get their projects up because, iron ore's past its peak and all the things we've said for many years. But the thing that gets me is the people behind all these projects are people with serious industry cred. So Genmin is Greg Lillyman, who ran Rio's Pilbara business for years and then was second in charge at Fortescue. Zanaga's got like a Bob Geldof style Band-Aid collection of mining industry luminaries from Mark Cutifani through to, I think, Mick Davis from memory.
Yep.
Yep.
Others. And Ivanhoe, I mean, Robert Friedland,
Yep.
needs no introduction. So,
Fortescue
and then
and
you got
Gabon as well. Yeah.
yeah, exactly. So that's going to be really interesting to watch if some of those projects can start to get up. And you would have seen with Genmin, who are ASX listed, I think they did a deal with a Chinese partner the other day, which got them a bit closer to reality. So that's going to be fun to watch.
I think that's the secret to getting these projects into production is partnering with the Chinese. There's the rate at which they can build critical infrastructure to ship and to effectively rail and ship the product is just incredible. So you kind of need that.
Hopefully, Genmin wasn't planning to sell their iron ore in Gabonese dollars. What is the currency in Gabon? I don't know.
Oh, you got me, Pete.
Got me stumped with that one.
Yeah.
There's a lot of optimization that needs to take place to make these projects that we're talking about efficient and effective. And there's a company in our very own Perth here that I think is the perfect company to help them out with that job, Switch Technologies.
Switch Technologies, mate. Concept through to deployment. Look no further.
That's right. These guys are specialist engineers for those out there who haven't quite heard of them yet, be it mechanical engineering, be it software, and every other form of engineering that you can think of. And they've got a sole focus. That focus is make your operations more efficient and save you money. What more could you want?
I want to bring ideas into reality with an engineering solution that has cheap operating costs. You know what? I'm very interested in that, and I think the best engineering partner you can think of to help with that problem, mate, Switch Technologies. Call Mike at Switch Technologies today. Details in the show notes.
Well, while we talk about the majors, the likes of Rio, we got to move on to one of the other big themes of the year, and that is big town M&A. So we got flavours of it in 2024. We had BHP and Anglo doing a bit of flirting, and then we had a deal that looks, much closer than that one to completing with Anglo Tech this year. More drama with BHP expressing their love for Anglo once more. So this is a big theme that we've seen this year, and I think there's a few more chapters to evolve on this one. But
throw in the background, mate. You had Glencore Tech rumours in major publications. Glencore
Rio was earlier this year as well.
Yeah.
For a moment there.
Glencore Rio. Yeah, lots of rumblings around the majors to effectively merge.
Yeah, and I listened to your episode a few weeks ago, and I don't disagree with anything you guys opined, where you effectively said that, BHP will probably end up coming back for these assets some way, shape, or form. So obviously now the Anglo-Tech merger has gone through, but it still feels like an unfinished situation, doesn't it?
The votes occurred, but there's still a lengthy timeline to completion here because of all of the regulatory approvals that are required, and that doesn't completely shut the opportunity for an interloper.
Yep. And if it's done, right, let's say even if it does get done, even then it still feels finished. So, I mean, there are more things in this than just those sort of flagship assets. Your audience probably knows, but really this deal is ultimately focused, or, the biggest synergies available are QB, 2 mines in Chile being put together to create value, Collahuasi and QB. So let's say Anglo-Tech does get finalised. Well, Glencore's still sitting there as a 44% shareholder in Collahuasi, so they are going to enjoy the synergies that would occur if these 2 mines get put together. They presumably will have some sort of voice in how they get put together and when and the terms under which that happens. So that probably makes Glencore's copper business more attractive, maybe, than it was 2 years ago, arguably. Shout out if you disagree.
I certainly agree. And Glencore know how to extract their pound of flesh in negotiations.
They were the exact words in my mind. Yeah, and they've been pretty vocal. They're not going to be a minority partner there. They want to be big in that, however that tie-up emerges.
Yeah, and they look like a company that just really is tired of waiting for something to happen. That was the vibe that I got from watching Glencore's Investor Day, which I think was December 3. And little wonder, right? Like, I jumped on the Bloomberg terminal a couple of weeks back, and I looked at the Glencore Rio Tinto valuation comparison going back to mid-2014, which is when those two companies, well, Glencore invited Rio to a merger, and Rio said, "No, thank you." I've forgotten the exact numbers, but Glencore's market cap is sort of roughly the same today as it was then. Rio Tinto's gained something like, I think it was $86 billion in value or something like that. So it would have been a good deal for Glencore had it got done in 2014. Probably would have been a good deal for Glencore if it got done this year again as well. So yeah, I mean, could you see a BHP or a Rio breaking Glencore in half and trying to take the base metals half? Possibly. We saw earlier this year Glencore completed this internal restructuring process where all their carbon-intensive assets are off in one Australian registered company, everything from ferrochrome to coal and all those other things. So it's certainly easier now to break off the tasty bits of Glencore and leave the Brussels sprouts, on the side. So yeah, it seems possible. But again, geopolitics comes into this, doesn't it? Because as you guys discussed on your show, to get the Anglo Tech merger done, Anglo had to agree to the headquarters being in Canada. Now, BHP exists in Australia under its own FIRB ruling. The headquarters must be somewhere in Australia. The CEO must reside in Australia. So there's probably ways around it, but simplistically, BHP can't do a deal where they promise to put the headquarters in Vancouver. Rio Tinto also exists under a FIRB ruling. So these things could be worked around. That could be the moment where BHP breaks off its copper division and, merges that with Anglo Tech and keeps the steelmaking ingredients off to the side. But yeah, there's just these little complications that sort of make a few of these things difficult. I know, like the big miners have all, they've all coveted Antofagasta as well, but there's big strategic shareholders who are hard to move and make that difficult. They even these days talk about Codelco, the Chilean government controlled copper miner. It sounds as though they've made the efforts to go and have the conversations with politicians there to say, have you ever thought about making this thing more marketable? Clearly very early stage, not formal offers, but yeah, like when you look at the available copper companies that these guys could take over, there's sort of something difficult about most of them. Lundin starts to look like the obvious. Your mates at Lundin, what a great episode. If Moneymine listeners, if you haven't gone and listened to the interview with the Lundin boys, you should. It was a terrific get for you guys. That would make so much sense for BHP, but it's not cheap now, right? So
all of the great copper companies have these big shareholders to bypass. They're not simple deals in general. There's I do think a bit about BHP coming back for Anglo, and it was a great call by you last year to say that they would come back, and we think that there's every merit for them to come back again. But why do we think that? It's because BHP is starkly aware of how the very rich capital intensity their own organic copper growth is, and how likely and probable it is for that capital intensity to blow out over time because you don't realise it all straight away, whereas you get certainty in a deal. And it's that discrepancy and that kind of internal look that drives the external M&A ambition. So I expect them to try and be aggressive here, and it feels like Anglo is the big prize to get, and I struggle to see them letting it go without having one more crack. What do you think, Pete?
Yeah, no, I think there's perfect merit in that. And yeah, to your point about BHP's internal options having relatively high cost to develop, there's also a fair bit of risk in some of them. So, everybody loves what they did at Vicuña, and they get a lot of praise for what was a prescient entry to sort of get their initial foot in there. And, they seem to have a high quality partner there who's sensible, calm-headed, experienced. But, it's still 5,000 meters above sea level. a lot of humans don't operate very well at 5,000 meter. And I know there is some mines operating at that height, but it's still going to be an effort to get that thing developed, right? And geopolitics, let's ring that bell again. Looks great right now while you've got Malay in power in Argentina with his RIGI package, which not only offers incentives but also safeguards for foreign investors. But who knows what the next leader is going to be like? And to make the Vicuña project work well, they're going to have to bring the water up from the Chilean side. They're going to have to bring a lot of the equipment up from the Chilean side. And in their ideal world, they would export the product through the Chilean side. So this is Argentinian copper. So you're going to have to get the Argentinian government and society generally happy with that happening. Now, we've seen at Simandou, the reason there's a 650-kilometre railway is because Guinea said, if you want to sell that iron ore, they used it, I guess, as a way to get a transnational railway built, to get ports built, so it could, step them up. And they have resisted the idea to some degree of it going the shorter route through Liberia to port. So will Argentina, will they sort of want some of Vicuña's copper to go out through Argentinian ports, which would be thousands of kilometres down to the coast? So I'm not saying that they will cause a problem there, but Vicuña is still a relatively high-risk project, right? So a difficult technical difficulty is pretty high.
That's a fantastic point, Pete. And we saw just over the weekend as well, the Chileans had a hard tilt to the right politically with a new leader coming in there. So we'll see how that kind of shapes up. You sort of mentioned the softish issues around these companies and getting deals done and that being complicated. And the other big one that has been pretty present throughout the year is succession. So we've seen Newmont, Barrick change leadership, Rio Tinto obviously changed leadership. It was sort of framed...
Like Henry announces...
Exactly. It was framed as if this
departure.
was a Hail Mary for Mike and Anglo, and that's a theme that's gone all the way throughout the industry. How do you think that kind of shapes these deals? I mean, the Rio example is really interesting, right? Because Simon's come in and there's been a complete shift, and we've seen the share price, like you say, hit all-time highs on the back of that. The market is really liking the renewed vigour with which he has taken to cost-cutting and getting deals kind of done. But how do you think that plays a role in the deal-making going forward?
Yeah, it's a good question. I don't know. I mean, I think the fact that they went back, that BHP went back for a second go at Anglo in November, you don't do that if your CEO is a lame duck guy, about to exit. So I think in hindsight, that shows that Mike Henry was sort of perhaps more engaged than many of us in the media sort of, I guess, implied with our coverage, as if, any day now he'll hand over. He's now, I think it'll be August next year. If he makes it to sort of July, August next year, he'll be in the job longer than Andrew Mackenzie and will be the longest serving BHP boss since the merger with Billiton. How does it shape deals? I don't know. I mean, if BHP is of the same mind as Travis and thinks that there's going to be a window to get a deal done with Anglo whilst we're waiting for antitrust regulators and the like to rubber stamp the shareholder vote, then he'd be going nowhere soon, wouldn't he? He'd be there heavily engaged. So I don't know. I mean, secession's very, very hard to read. It's one of the topics that reminds me of, at the start of my career, I was a sport reporter, and so would go down to, Richmond training in the AFL and, interview the assistant coach, and you'd have like a little tip off that, such and such player's got a dodgy hamstring and is actually going to miss 3 weeks. And you'd ask them the question and they go, no, he's right to go. And then of course there'd be a late withdrawal on the Saturday, and, they'd openly sort of you, yeah, we lied to you about that one. And there was sort of no comeuppance for them. As a business journalist, right, working in financial markets, continuous disclosure means that they can't really lie to you often. But secession is the one where you sort of get told 1 week, no plans, and then the next week the CEO's gone. As for who would replace Mike, that's going to be a fascinating choice, right? because if you just judge it on the publicly available information, there's absolutely no doubt that Geraldine Slattery is considered to be in a more senior position than all the others. You just have to look at what she's paid. You just have to look at the I forget what it was called. Was it the retention bonus? She got paid a retention bonus shortly after the BHP Woodside deal, which basically says thanks for not going to Woodside to be, if not the senior person, an extremely senior person. So she presents as the logical choice, but a CEO handover isn't, you don't just hand it to the person who's next best performer or next most senior, because it's a moment potentially of great cultural change, right? Like someone might go into the boardroom and throw them an amazing idea to pivot the company towards something else, and that person gets it. So there's dark horses in there, like Johan van Jaarsveld, who's run a lot of the strategy and M&A in the past 6 years or so. If the BHP board are minded to these sorts of creative things about deals, and do you break the company in half to get a big deal done, and all these other conversations, then people like Johan, that sort of stuff's obviously Catherine Raw's beat now. And everyone says Catherine Raw's too young and too fresh. Well, she's been a CEO of a company in the UK, a multi-billion-dollar company. She's been CFO of Barrick. How much, BHP has previously appointed a 44-year-old in Chip Goodyear to be CEO. So, it's going to be interesting to watch.
And the Newmont, do you still keep close tabs on Newmont, Pete, given the Melbourne base that was Newcrest? Tom Palmer's announced his departure the exact same day that Bristow got booted. Seemed all very coincidental, and now very different reasons going on there. But the gold companies, they're having their own sense of turnover at the top. I feel like on the other side of that, you get trepidation to do a big deal in your early term as a new CEO, unless you're super bold. And heck, speaking of that, like we're seeing that from Perseus right now. Like the new CEO is going kind of full steam ahead on predictive, despite being in that top job just a couple of months. So it's not completely out of the realm of possibilities, but it is abnormal when you get a new CEO, especially one that's not an internal pick, come in and do big deals right away.
Yeah, and isn't it interesting that Simon Trott, whilst has come in and been very active, it's divestments, right?
Yeah, that's the easy thing to do, I think. Like cut costs, divest non-core, like low return on capital business units, simplify. Like I think those are the easy and right decisions for capital markets to really get behind you. And I'm a big fan of the public rhetoric we've seen out of Simon Trott since his appointment. Like he seems like a breath of fresh air amidst what seemed to me like absurdity coming from the majors for the previous 5 years in general.
Yeah, and so as it pertains to Newmont, I don't have any particularly close insight on that. Like, perhaps I shouldn't admit that, but I probably followed Newcrest closer than I do Newmont today, just because they felt closer, and I guess the ASX listing felt bigger and more real. But someone did point out to me recently that the gap between Newmont and BHP and Rio has closed dramatically in the past decade. Like the graph was quite staggering. So I think, I won't try and dream up the number. Your audience will be able to Google whatever the market cap is of Newmont on the day they're listening to this. But, it's sort of getting right up there. Like they're a big, and with the increasing focus on copper, at what point can Newmont sort of claim to be a diversified miner?
Zijin's the one to look at there in terms of creeping right on the footsteps of BHP and Rio. Like it looked almost like they were going to overtake them earlier in the year, and they've held strong. But it's an evolving landscape at the top of things. What's been your favourite deal of the year, Pete?
Look, one that I thought was really fun was Larvotto Resources. I think you guys tracked this, the little gold antimony thing in New South Wales. So for people who haven't followed it, obviously antimony was this sort of off-Broadway thing that no one thought much about, and then it became one of the critical minerals that China, choked supply of, prices rally. Next thing you know, the ASX announcements platform has the word antimony on it 17 times a day, where everyone's finding it in their back pocket. But Larvotto, they went and bought for I think it was like $2 million, this old gold project near Armidale in New South Wales, and it's got antimony with it. And just an incredible share price rise, I think in the thousands of percents. And they're getting close to restart. And then, we're probably talking approximately September, October this year. In comes the takeover bid. In fact, it was October 21, I remember now, because it was the exact day that Anthony Albanese was in the White House with Donald Trump signing the critical minerals sort of pact thing. And here we had an American company trying to buy an Australian antimony company. So it was for a journalist, it was the perfect, segue of, themes all happening on the same day. But the suitor was fascinating. United States Antimony Company, USAC. And I'd never heard of them, so I went and looked them up. And have a look at their share price. If you think Larvotto had a bit of a rise, this thing had gone from, just look it up. It was crazy. And the bid, of course, was scrip.
I'm nuts.
And the Larvotto directors, they go away and they think about it and they say, we're going to decline this. And the reaction to the USAC share price is hilarious, because I think what it's actually done, USAC probably thought they were being clever trying to buy while their scrip was crazily inflated, and they, fair play to them. But I think all it did was it made people turn around and look at USAC and go, what? This thing's trading how many times earnings? And, as a result, the balloon has completely deflated since, as the market looked at US Antimony Company and said, holy crap, this is like a cappuccino with about that much, coffee and about that much froth on top. And so Larvotto continue on their merry way as an independent ASX listed company for now. And USAC haven't come back for a second crack. I suspect they probably won't. How about you guys? Anything out there that you found fun?
I think we're in the midst of a pretty unreal one with Predictive Robex and Perseus. We haven't seen the final chapter there yet, but it's hard to look past that one.
Yeah, the battle for Bankhand's unreal.
I've got one more that I've learnt plenty on. It wasn't anywhere near as eventful, but I thought what's now DPM, Dundee buying Adriatic, was just so interesting. We had been kind of critical of Adriatic. They'd had problems ramping up, be it ground conditions, recoveries, these sorts of things. And the stock kept rising. They did so many fully funded capital raises. The stock kept rising, and then they crowned it with a buyout at almost an all-time high. So I think kind of as an investor and as a kind of bystander watching that one, there was a lot of lessons to be learnt there. Trev, any others come to mind?
Just speaking of lessons learned, I think my biggest reflection on companies in the last year has actually just come from looking at MinRes. The turnaround story that's there. I was skeptical of their ability to execute, but they've surprised me at every step, it's just been a very impressive turnaround story there, despite kind of every obstacle that was thrown at them from multiple directions. Operationally, things are going really well. They've deleveraged the balance sheet with some pretty impressive deals, and they've executed Onslow amidst some hiccups on the road and the likes, in a very impressive way. The volumes that they're exporting out of there are truly commendable.
Yeah, it looks as though they're through the hardest part of the cycle, doesn't it? It looks like they've they can now see the path out of the forest.
Totally. In fact, I even think they're out of the forest. The debt now it's very manageable, especially post settlement of the POSCO deal. Yeah.
Yeah.
And with iron ore where it is, it's just happy days. Yeah.
Yeah. So who knows what happens on the regulatory front, but on the commodity side, or asset selling front and operational front, I think you're dead right. Question without notice, so feel free to blanket. A deal that I haven't really understood, and I'm curious if you have, is Zijin Mining. You mentioned them earlier, the big Chinese gold miner that has gone from, I think, 10 billion to 100 billion or so over the past 9 years. This year they did an IPO in Hong Kong where I think they listed all of their non-Chinese assets in Hong Kong.
Yeah.
Yeah.
non-Chinese gold assets.
They maintained an 87% interest, I think.
Yeah.
So they floated 13% of the gold assets and up 70% on day one. Just rip snorter. Yeah.
off the
And
back.
so it's,
I was just going to say, off the back of that, Pete, I've just noticed tremendous appetite from a variety of Chinese companies to acquire international gold assets. In fact, as we're recording today, CMOC just spent $1 billion buying Equinox's Brazilian gold assets. Like a few days ago, Ling Bao doing the deal with Simandou. Like it's almost every other day there's a different Chinese gold company scooping up gold assets around the world somewhere.
that the Ling Bao mob, I mean, that's very interesting. So Simandou obviously being an island off the sort of northeastern edge of Papua New Guinea. I think Ling Bao, this time last year we were talking about them, they were involved in the Woodlark Island, which is on the south side of PNG. It was held at the time and probably still is. Haven't done my research, by Geopacific Resources, the ASX listed company. So I'd love to be a fly on the wall in Ling Bao headquarters, because it looks as though they've got like they like gold, but only if it's on a tropical island. So maybe this is like a White Lotus style gold mine and, I don't know, luxury resort style strategy that they're operating here.
Yeah, there's another little one as well, Titan in Ecuador, and Chinese companies have been very active in Ecuador too. Jiangxi Copper, another Chinese group there as well. But we butted in. You were getting to a question on Zijin.
I was wondering why do you think they've done it? Like, did they just need a bit of cash? You know, the West Australian asset they own near Kalgoorlie, that is, I gather, in the Hong Kong listed vehicle now?
I believe so, Norton
Yeah.
Goldfields, yeah. Why did they do it? Yeah, I honestly, I just think the Hong Kong market has had remarkable appetite for gold exposure, and that's expressed in many ways. Some of the pure play gold listings there, but separate to that, even like the gold jewelers were some of the best performing like listings on that Hong Kong exchange. So I just think it was something that just lowers their incremental cost of capital for overseas gold endeavors as well. But if you have an elevated share price, lower cost of capital. And there was massive appetite there. What is interesting is it last week. So Chairman Chen, who's been a big entrepreneur behind Zijin's growth, he's actually stepping down from Zijin. So that's a very big kind of succession transition departure kind of thing.
Absolutely.
In that company's story.
It reminded me a little bit of the other big Hong Kong listing that's relevant for Australian miners of this year is the contemporary Amperex, the big battery maker, China's big battery maker. They, of course, did a Hong Kong float of some sort as well earlier this year, which, if you're a WA lithium miner, that matters. And that, my memory is that IPO launched spectacularly as well, had a terrific first few days.
Yeah, they're fiddling with the on-off switch at Jiangxi Wu has been a lot of ink has been spilt over that one this year. That's an interesting one. Should we move on to a few more predictions for the coming year?
Before you do that, JD, I feel like we've got to revisit what our predictions were last year. So we've just come on the back of Pete asking 30 fund managers what's their highest conviction prediction, what's the most non-consensus prediction, what's the best performing commodity, and what's the worst performing commodity. And JD and I actually answered those questions in one of our last episodes of the year last year. I'll let you hear how we responded to those, and then maybe we'll come up with some new ones. Highest conviction, diamond price is lower in 12 months' time. Lab diamonds continue to hurt that market.
Highest conviction bit. Be hard, but I'd rest pretty easy with some of the met coal kind of names. I don't know if that's a specifically 2025 thing, but I think hold them, and in time you'll do well on some of those names.
So well done, JD. I think Whitehaven's up nicely. Diamond price, natural diamond price, I think is down 5%. So we both did well then, mate, on the highest conviction prediction.
It's a one-way road.
I don't know if this is consensus or not, but I think the Chinese mining equities will outperform the Australian producers of equivalent stature. So like your Zijins, your Sinamines, like those sorts of companies will do better than the equivalent ASX listed co.
Non-consensus, pretty beaten up, eaten into the cost curve, which we've touched on a couple of times throughout the year. I think PGMs are to narrow it down, I'll say Platts, or could go more niche and say rhodium will have a good year. Something nobody really cares about. There's a few companies in South Africa to kind of look at.
Not bad, mate. Platts was like up 100%.
Mate, Chairman Chen backing Zijin.
Yeah.
Also had a good year.
The Chinese did outperform. Yeah. Yeah. Oh, mate, we're 2 from 2. How good's this? I'll go tin best.
I think tin will do well.
Oh, mate, 3 from 3. Best performing commodity. No, not that tin was the best, but it did do very well. And let's see if we can take the cake by predicting the worst performing commodity. Worst. Cobalt. Up 117%.
Gold underperformed.
Mate. Oh, we threw it away at
the
the
wheels
last.
came off at the end there.
It's un-Australian.
Oh,
Yeah.
we cooked it. Pete, you also threw some predictions out there. They weren't in relation to those 4 questions, but we put you on the spot quite a bit in our last episode. Let's revisit how you did, because we'll keep everyone accountable here.
One thing that should happen there at Lahia is that gets combined with St Barbara's Simberi. Cobar obviously is going to be a scene of consolidation, most likely. There's some deals that can be done there, you would have thought. Interesting to watch what's happening up in those PNG islands with Geopacific and their close neighbour Kingston at Misama. Who else is going to do a deal? We mentioned Sierra Gorda and Spence. It probably may not be next year, but that's got to happen sometime soon. I do wonder if some of those ASX-listed coal miners make sense to come together. Between Yancoal, Stanmore, New Hope, to make a more liquid register. And I wonder what's going to happen with Chalice, right? A few years ago, Sibanye Stillwater come into Australia and they wanted us to know they were here and they were coming. I wonder if they saw Chalice as their next thing. If you're a company like Fortescue who still is saying, we still think hydrogen's a big thing and we want to be in hydrogen, why aren't they going and buying Nel? And instantly getting hold of, 10% of the world's electrolyzer manufacturing supply chain.
So, Pete, I think you had some great, deal predictions there. Great logic.
I think that's a 0 out of about 15, isn't it?
You threw a lot of darts and none of them came to fruition, but the logic was good.
When I counted back, I was surprised because the rationale was so good. I mean, we saw a deal with Simberi for one. We saw a Geo-Pacific deal as well. Yeah, we didn't see the coal consolidation there, but I thought the thinking with a bunch of them. I guess we saw a deal in the Cobar as well. We saw CSA.
Not consolidation. I'm giving you 0, Pete. Yeah. Sorry, but
I'll give myself 0 as well. Yeah, is it Cobar? The Cobar district. Kind of fascinating that nothing's happened.
Oh, right? It's always a next year story. Let's see how you fared on the other questions we put you on the spot for.
A couple quick fire predictions for 2025. What will the iron ore, lithium, and gold price be in 1 year's time?
Iron ore will be 91 US. Lithium, spodumene. Oh, cover your ears now, Tony Ottaviano. 800 US a ton. And gold, I'm getting on the Greg Robinson train, $5,000 an ounce.
So I got to give you credit there. You had some pretty good predictions there, mate. I think your predictions on commodity price were probably better than any research analyst who tried to endeavour on predicting the same last year.
There were some great calls.
Mate,
yeah.
Gold, $5,000 an ounce. We would have laughed you out the door last year, but you actually seemed pretty damn close to reality. So well done.
Lithium was $800 about a week ago.
Yeah. And iron ore staying resilient. Yeah, well done. That was great. Full points for that one. Let's see how you did on the rest.
Will BHP have another bite at Anglo in the next year?
Yes.
Yep.
Yes, I think so. Look, the end of your question is probably the only uncertainty, isn't it? Will it be next year or will they wait longer? But look, they've looked like a place that is a bit impatient, and I don't say that as a criticism. But Mike Henry and Ken McKenzie are not going to die wondering. They've made that abundantly clear these past few years.
That's a stellar call. Well done, Pete. What's the big theme that we reflect back on in 12 months' time?
Maybe the AFR takeover bid for Money of Life.
Still waiting for that one, Pete. We'd Look forward to
What
that
about a
one in
reverse
2026.
takeover? How about
We're that close.
yeah.
No, the rationale with BHB and Anglo, as we kind of touched on before, was great as well. So I thought there were some really good picks, and I'm very keen to hear what you've got in store. Should we run through a few for 2026, guys?
I had to think about these like 10 minutes before we started recording, mate. So, Pete, why don't you kick us off? What's your highest conviction prediction for the year ahead?
I think if you think about the top 5 ASX listed gold miners,
Yep.
I think there'll be a new entrant by this time next year. And really, predicting this within 1 year is probably a bit bullish. It's probably a 2 to 3 year call. But for the sake of the theatre, let's do it for this time next year. Top 5 ASX gold miner, Endura Mining.
Wow. That's
For your audience who aren't familiar with this, this is a privately held company that is largely owned by Australian Super. And it is the leadership of this company is star-studded. You've got directors basically from all of the big ASX listed gold miners. You've got Jake Klein from Evolution as the chairman, Bob Vassie, the former St Barbara CEO, and now what is he, chairman of Ramelius? Is that right?
Yes.
You've got a director on there, Tony Kiernan, Northern Star. Correct me if I'm wrong. Is it Ms. Langer from Genesis? Shout out if I'm wrong. So anyway, you've got this weird thing where all of the big gold miners are allowing their directors to go onto this other thing, privately held, with Australia's biggest super fund involved, and all for like some little thing in New Zealand. So it almost feels like a hobby farm, right? It's like, but so surely this thing is actually made for greater honours. It will be a vehicle to do something like it. And I've racked my brain as to what they could do, right? Like, you know, Oceana Gold's got 2 gold mines in New Zealand. Does this thing end up buying them?
Yep.
Or what does it do? And the thing that fascinates me most, so it's already pretty high powered and pretty star-studded just with those names that I've mentioned. And, you know, Australian Super, no one's got more money really. But in my conversations with the big multinational diversified miners, they are strangely conscious of this thing. And I can't really work out why, but they are taking notice of it. So I'd watch this space.
I like it.
That's a big prediction for in the space of 1 year to go from private to top 5. Big call. Nice beat. JD.
What's the bar there? Is it a $5 billion company to be the top 5?
It's probably higher now.
Probably a bit high. Yeah.
Yeah.
Maybe Genesis rounds it out. Yeah. I like it, Pete. Highest conviction prediction, just like you, I'll have a bit of a caveat that I think this plays out over a few more years, but I just think the energy space, when I look across the commodities and think about what's really beaten up, I think the energy names, and I think you can sort of search high and low. The ASX really doesn't have too many of these names. I think there's names in even weirder kind of parts of the world in the North Sea, as ones we've spoken about, Trav, where you're getting paid nearly a 15% dividend to kind of wait. And I think with, you know, oil under $60, you will get the chance, who knows exactly what they're going to be in 12 months' time, but you will get the chance to have a bit of an uplift or get paid to wait there. So that's one I'm kind of comfortable in. What about you, Trav?
Nice. 2025 was a year of massive margin expansion for especially gold producers, right? And I'm still bullish gold. Don't get me wrong, but I think 2026 royalty companies are going to outperform because, like to your thesis as well, if you have the energy complex come up, well, that actually increases costs, and you might actually have a very healthy like gold price outlook, but you could still experience margin compression. And when there's margin compression in the miners, like it's still gravy for the royalty companies because guess what, royalties don't have costs. So I'm banking on royalties versus miners 2026.
I like it. Pete, non-consensus view.
Just on royalties before we move on, if I may slightly hijack your show, did you
Please.
see the BlackRock World Mining Trust sold at a great profit the royalty they had on the Brazilian copper and gold assets of what was Avanco became Oz Minerals became BHP?
That was an interesting one, yeah. Yeah.
Something like the buy-in was somewhere close to 10 million, I think, and they sold it for, I don't know, 13 times that or something.
Yeah.
The royalties are amazing. Like, yeah, they're true special assets.
Yeah. Sorry, Jonas, what was the question?
Most non-consensus prediction for 26.
Hydrogen, the commodity
He's
to be
back.
on.
He's back.
Now, I mean, I'm really swinging for the fence here for the sake of entertainment, but if, as I know you guys do, if you take the theory that you should buy stuff when it's hated, hydrogen's hated. What's hated right now? You'd probably say nickel and hydrogen, and hydrogen's probably hated even more. So I can't really give you a credible reason as to why hydrogen is going to have a good year, only that, maybe the elastic band has been pulled back in a negative direction far enough that, it'll come back a bit. The thing about hydrogen also is that you can play it through an ETF. There are some ETFs that hold, a basket of 20 hydrogen stocks.
19 are probably scams.
Yeah, 19 of them will probably go broke. But if one of them goes right, you might go pretty well. So I look forward to this being replayed in a year's time when
Yeah. No, it's
hydrogen's
good.
been erased from the human dictionary.
I like it.
I dread this being played in a year's time. Trav, have you got a non-consensus view?
I do. I'll before I give mine, I kind of like your thinking on what's hated. So I was pitching to JD the other day that like carbon credit markets, like surely they're a place to look for hated commodities right now. Anyway, I deter because my non-consensus prediction. I actually think another thing. 2025 was the year of geopolitics influencing metals and mining markets, and everyone talks about 2026 just being an extension of that theme or a growth of that theme. I think geopolitics is going to matter less in 2026 than it did in 2025. I think it's peak geopol in the same way 2021 was peak ESG. Like it still mattered in 22, 23, but less and less. And I think 25 is peak geopolitics.
I like that.
So would you extend that, Trav, to say that there will be a sort of a coming back together of China and the US? Is that what we're going to see? A bear hug between Donald and Xi?
I'm no expert on this, but I think a deal will happen at some stage there. Yeah, and the deal, by the way, probably will see, the US leave the Asia Pacific, which will be a very, very interesting new world order for Australia.
We'll have lots of very affordable rare earths.
Very good.
JD?
I'll throw one into the mix. PGMs to outperform versus gold. So gold has obviously done phenomenal. That ratio is out of whack, and it has been for a long time. So who's to say it'll close this year? But, we've seen the one between silver and gold close up a bit. So I'm curious to see if platinum, which has edged gold this year, and that kind of basket, the PGM basket, I'm curious to see whether that continues to kind of close its gap after 15 years of kind of shocking performance. And I'll throw one more into the mix as well. We kind of live in a world where volatility has been just on the nose. So I think volatility will rise. We have plenty of ETFs in which you can play this. And I think we've seen these big spikes. There's probably been 3 or 4 or 5 over the last 5 years. Liberation Day is one. COVID is obviously a massive one. But I think volatility will come back as the world keeps heading in the direction it is going. Next up is best commodity. Who's going to go first here? Pete?
Well, I kind of have gone hydrogen, but why don't I throw in... I was going to throw in nickel just because it's hated, but maybe met coal. Maybe met coal, just based on, I don't know, there's a complex interplay happening at the moment between China and the US. Sorry, between China and India on steel. There are sections of the Indian business community, the steel makers like Tata, who are fuming at all the Chinese steel that's getting dumped in India. There's a lot to think about there for Australia because, the default position was the Indian steel industry is going to grow dramatically out, in the next decade. and that would really help Queensland met coal exporters, because India does not have much of its own met coal. If China is going to continue to overproduce steel at the rate it is, and export it everywhere, does Indian steel growth occur, and therefore, does Queensland met coal miss out on that? These are all sort of questions that I don't know the answer to. But perhaps, I don't know, perhaps if there's some sort of deal, as we were mentioning before, for China to sort of, ease tensions, maybe there'll be a bit less steel exported. Maybe Indian steel will go ahead. Maybe met coal wins. I don't know.
Bit of reprieve. Yeah. How about you, Trav?
I'm pretty buoyant on all commodities next year, with the exception of a small number, like diamonds in particular. But I'm pretty buoyant on most commodities. I think like uranium, lithium, gold are all going to have good years, so the retail guys will be happy. I think I'm still very bullish on tin and PGMs, but what I'm picking to be the best performing commodity, thermal coal, specifically nuke. The index currently at US 108 per ton. I think that's a cyclical low. I reckon you've got a chance of a 50-60% uplift on that next year.
Yeah.
Can't argue with that. And yeah, it might be a bit of a cop-out, but I've got a similar kind of basket approach, and I've got a bit of a basket approach on the short side as well. But I said rhodium and PGMs last year. I think they continue to do well. And the other one is energy, and energy is oil, coal, and uranium. I think uranium's one we've been a touch quieter on lately, but I think that continues to grind higher. So yeah, I think maybe you can mark me by averaging those ones, but I think they'll all do well.
Which coal?
Newcastle Thermal.
Thermal, yeah.
Cool. Worst commodity, guys. What are we bearish on?
I'll double down
Well,
here.
I'll make myself a target. I'll say gold, because Travis told me that there's going to be, coming together between China and the US. So therefore, gold, soothes.
Jeez, don't put that one on me. I don't want to be held accountable to that. That's like a 2028 prediction.
Worst commodity and very non-consensus there, Pete. What are you going for, Trav?
Cobalt, doubling down here. Cobalt absolutely surprised me that it's up 117%. That's not based on, supply really being curtailed. That's based on export controls from the DRC. That supply needs to rinse out, and that commodity should fall.
Yeah, I've got to kind of, build your own ETF here, and it's a basket. There's a few different layers to it. So tungsten and antimony, I think these have just had incredible runs this year, and I think that'll incentivize new production. NdPr is such a weird one, because I'm very curious what happens with the price floors and what that then leads to for a kind of spot floating price. If all these producers are producing and they're just selling to governments, or there's government agreed offtakes for $110 NdPr, does that mean the spot price kind of falls? I'm not sure. I'll throw it in the mix there. And then to round out my ETF, diamonds, I think I'll just pick up another 5% down, and cobalt, because of the exact reasons you've laid out there. So
just to make myself really unpopular, guys, I wonder, devil's advocate, should we be saying copper? Because everybody loves copper, right? It's like the saint of the industry that no one ever has a bad word to say. But isn't it the case that the strong rally in copper prices this year was partly about this the tariffs, right? The physical thing that people were trying to get the metal into North America ahead of tariffs occurring, and there's now some unnaturally large amount of the world's copper in North America. So is it possible that the price this year just rallied on a short-term temporary dynamic, and that perhaps next year, if some of the interrupted mines around the world resume a bit of production, and this factor of trying to get it into North America fades, maybe copper eases a bit?
I think your thinking is really sound there, Pete. I couldn't put it in either basket, and a lot of that came down to what you said right at the end there. It's just so primed for disruptions, and we don't know exactly how they'll play out. So
I'm super bullish copper.
Super bullish?
Yeah. The whole base metals complex, I'm very bulled on. Yeah.
Yeah. I think there's a lot of reasons, but putting a 1 year timeline on all these things makes it that much more difficult, doesn't it?
That's right. So yes, everyone's bullish on a 10-year view, but yeah, I wonder on a 1-year view. But again, look forward to that being replayed in a year's time.
And why don't we wrap up with a few M&A predictions? Just throw a few more darts at the board. Trav, I know you're a big fan of M&A.
Oh no, I'll start with Pete. Pete's got great logic and a 0% strike
Oh
rate.
well, yeah, I'll lean back on my Endura mining coal. That was my main one. I still think maybe I'll just keep saying Spence, copper, and South 32 until it happens. I think that's fairly difficult to not back in. And it'll be interesting to watch rare earths, won't it? I mean, we saw Linus and MP were talking. That sort of doesn't feel like it can happen now with the big rise that MP had. For a while there, you might have thought Neo Performance Materials would be a target from someone wanting to vertically integrate. And maybe that still happens. But yeah, maybe I'll stick with Endura and Spence.
I like it. I like backing yourself for a second year in as well. Travis?
I'll pick up on your Linus thread there. So we got news last week that Tronox is now getting their lick of refinery bucks. I was big on my theory that Linus would buy Luca. I've changed my mind. Linus to buy Tronox.
I like it. I think they've got a common director, don't they? Isn't Vanessa Guthrie on the board of both?
I didn't know that.
Not that would matter. High quality, very proper person, but of course. But yeah, they know each other well.
Yeah, I've got a bunch of deal prediction stuff there, but I'll save them for a later date. I've got like 20 deal predictions, but I'm gonna look like a lunatic saying them all.
Sounds like a bonus episode for the New Year period while your feet are up.
Pete, you've spoken and written about Liontown over the year, and they've actually piped up on potentially doing a brine-related deal. Is that in your bingo card for next year?
Well, maybe. I mean, I should probably stop making predictions about Liontown because in an article over the last year's Christmas period, I sort of made the point that based on the crude mathematics of how much cash they're burning a quarter, Liontown could be broke by this time next year, i.e. Christmas 2025. And that didn't go unnoticed down at Liontown headquarters. If you're a shareholder in Liontown, you should be very, very happy because
we are. We're all shareholders.
Well, there you go.
The Australian government.
Well said. Well said. Liontown fights for its honour in a way that I very much admire. Maybe, I mean, so when Pilbara Minerals, or PLS as they're now called, went and did a spodumene deal, I don't know, we sort of looked at that and said, shouldn't you be diversifying? And their rationale was, well, spodumene is the thing we have core competency in. So I guess that's the tension, isn't it? Do you go and buy something you've got core competency in, or do you try and straddle both sides of the lithium world? I would have thought they need to get on top of Kathleen Valley first, don't they? I don't feel like that situation's in control to be going off and buying things.
Well said, Pete.
In general, I think the best M&A opportunities are looking around the sector. And I look at my own portfolio. What have I got a lot of? It's undeveloped projects that I think are worthy of corporate action. And I think that there's that's like the mispricing there of very attractive, very worthy undeveloped projects. Like, it doesn't take much for a corporate to appreciate that value and then price it appropriately with a deal. So that's kind of a theme I'm willing to continuously bet on.
I've got about 5 here and they all fit that category.
Yeah, exactly. Yeah. Pete?
And another one to watch will be interesting is the little-known ASX-listed company called DGR Global.
Oh, jeez.
So in the last couple of days, we've seen
SolGold.
BHP support a takeover of SolGold by the Chinese company Jiangxi Copper. Now, this ASX-listed company called DGR owns about 6 to 7% of SolGold. So notionally, that stake's worth, like 114 million or something like that. DGR's market cap is 38 million. And so on face value, you could look at that and go, wow, there's a mismatch here. Someone's going to get in and it will re-rate.
Yeah.
Why isn't it re-rating? Well, everyone can have their own views, but in the spirit of do your own research, read the DGR annual report and look for the many disclosures about the fact that, there's lots of places that the Sol Gold windfall will go before it potentially gets returned to shareholders.
World's worst financing ever.
Is that fair?
Oh my God, mate! That was abhorrent what that company did 16 months ago. I want to say abhorrent. No regard for shareholders other than certain someone.
Pete, you've given us a bit more Christmas reading to do. Love speaking with you as always. Have enjoyed this chat, and yeah, it's been a very eventful 2025. Here's hoping 2026 is just as good. I hope you have a great Christmas and New Year's period, mate.
Likewise, and if I may be so bold as to try and speak on behalf of your audience, thanks to you guys for, the big year you've had and keeping it going. It was a huge year for you guys, with, the great Matt Michael moving on. And what you guys have done this year, I reckon, reminds me of when Buddy Franklin left Hawthorn. Hawthorn came out the next year and won the flag. And when Gary Ablett Jr. left Geelong in 2010 to go to the Gold Coast, Geelong came out the next year and won the flag. So, Matt Michael was a star, an absolute star qualities just poured out of that guy into a camera, into a microphone. But even with his departure, this is a great show that when I move around the industry, I meet so many people who love it. So well done to you, and hope you get a great rest and come back and do it all again next year.
Appreciate it, Pete. Means a lot.
Thanks, Pete. We look forward to working alongside you after the AFR Money of Mine merger in 2026.
No, it's a reverse merger.
Oh, there we go, mate. Have you got what else is left on your mind before we say goodbye to the Money Miners for another year?
For another year. Well, chatting with Pete is always great. He's a man who I get a lot of value from reading his work, and especially his deep dives lately. And as to answer your question, what is on my mind? Plenty of things. That was, I think we covered the highlights of 2025, but like you kind of alluded to in some of your predictions, there could be a few different things that we're talking about come this time next year. So I'm very, very excited for the year that comes. I think we're in a great part of the world, commodities. I think it's one of the most interesting sectors to be in. I think it's going to be more and more volatile, as you kind of got a bit of a hint in one of my predictions. Is anything standing out to you, mate? What are you excited for?
Excited for? I'll change that question. What am I grateful for? I'm grateful that we've got the wonderful audience that is the Money Miners. Whoever you are listening to this episode or watching this episode, I'm very grateful for your consistent consumption of our podcast and hopefully our email medium as well, the Director Special. It means a great deal to us that there's a sufficiently large audience out there that makes this a doable day job, and we're very grateful for that.
Could not have said that better. We are tremendously privileged to be able to do what we do, mate. And yeah, all that is thanks to the Money Miners out there. So
not just the Money Miners, the partners too.
The partners, the fantastic partners. Sandvik Ground Support, who've been there almost since day one. We are very grateful for the support you've given us, as well as some fantastic partners who we've come along the journey for the past year. Focus, the platform by Market Tech, Intralinks, Switch Technologies, and Exceed Capital. Thanks a bunch to all of you guys for supporting us.
Hoodaroo.
Hoodaroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read our disclaimer.